So guys, back with another trade recap. So for the past 1 week and some days, okay, since the month of November 12th, I think so. Oh, sorry. Since the month of October, I haven't taken any trade since the month of October. So this month is now we are in the month of November, and this is my first trade after 1 week of not trading. This is my first trade after 1 week of not trading. So I took an L today. I took a loss today on Euro USD based off the AMD model that you guys know I trade. So I'll just walk you down from the hourly chart. On the daily chart, you're already bullish. So if you already know that, if you've been watching me, when I'm bullish, I'll also know that the daily is also bullish as well. You get. So on the 4 hour, what do you have? You can see this cycle delineating that candle is actually the candle you are looking for price to read, then distribute to the upside. This is a 1 a.m. candle which acts as London lows. You get. So now what do you have? Came into New Price came into New York. We entered the New York station. That's this 5 a.m. candle. Yeah, this 5 a.m. New York candle. So price rated London lows. You can see we had a CRT model. We had a CRT that candle range theory of price sweeping it and closing above the bullish candle just for context. Actually, sometimes you don't actually need to close bullish. You just need some criteria on the M15 chart for know that yes, I can go to the upside. So, but what happened then? I just got swept during PM section. Price action this month has been very, very, very. No, we are coming to an end of the year. Like, how will I say? This is the end of the year. Like, we are in November and December, and you're almost coming at the end of the year. And I also expect price action to not be as clear as always. Do not expect price action to be clear as always. Right now, price action is very, very messy. And what you have to do right now is to reduce your risk properly, and do not expect anything. Because even I don't even need to blame market condition right now, because as a trader, you actually need to know that you have to plan yourself on every trade that you take. I'm not so to blame market conditions. There's nothing concerning market conditions with what happened today. So you can see 4 hours bullish, 4 hours bullish here because we have breaking market structure. Price we are not at any key level. Price is at normal random area. You can see that actually this was actually my A plus setup, but I have nothing to do. We got a nail and I have to accept it. So on M15 chart, we had okay. So right here I'm on the M15 chart. Let me clear this. Let me move this out. Okay, I think that is out for now. So right here, you can see this is an L that I took. So I lost almost about $20 on this, $20 on this, and fair enough. I I had this was oh god. So sorry guys for that breaking transmission and just having a very bad network right now. So you can see actually this is the AMD model that I do trade. So you can see I have London lows been taken out after price really did some stuff right here. So we have London making its accumulation at this point. We had this manipulation accumulation here at London section. We have price sweeping out London lows, which that's the manipulation. So I was expecting price to like distribute to the upside to the minus 2.5 standard deviation. So what was my entry criteria? So right here, I waited for price for breaking a market total shift to the upside. Then price traded back to the 79% level of OT. Then I took my buys. After I took my buys right here. But firstly, before I took the buys, I actually got in on a fair value gap entry here, which was a low probability fair value gap for me. It was a low probability fair value gap because it was like fear of missing out. Like I've been 1 week without trading and I just want to enter this trade. I want to enter this trade. Fear of missing out, FOMO, which is really wrong and you shouldn't do that as a trader. You get. So my next entry, my main A plus entry was below was at this my entry was at this 0.9% level and I took my buys. Right after I took my buys, we are opening like some little profit and you know as I said earlier that we are actually the year is really coming to an end and you shouldn't expect more good price action at this particular period of times. And also I think the time range also added up. So sometimes like as of middle of the year, each 4 hour candle close should be around 2 o'clock Nigeria time, but now it's closing around 3. I don't know why it's happened, but that's not actually the problem. You can see after price set my stop loss, went after my stop loss, then you see right after it started moving in profit. Like bro, you can see that I was actually writing my analysis. But I just have to accept the loss. I know nothing is 100%. Nothing is actually 100%. All A plus setups will fail, but what you have to really need to know and also get into your head is actually need to apply good risk management on every trade you take, no matter how good it is, no matter how nice it is, no matter how like the risk reward ratio. Because this was about a 9.3 risk reward ratio. But see, I'll just got in with a few ticks. Price actually is heading to profit actually now, but there's nothing I can do. All I have to do is to keep going and learn from my mistakes and also apply risk management going into the next trade. So that'll be for it. That'll be it for this trade recap. I hope you guys learned something from it. First things I actually get from this trade was don't get attached to a trade, to trade setup. What you actually need to do is to treat trading like a business and also plan your risk before entering any trade or before setting up a trade. Plan your risk. Do not attach fear of missing out to your trading because it's really really bad. It is really bad. It cost me a lot of money at taking this trade setups and also have conviction on the trade before taking it. Because I have conviction on this trade, that's why I took it. So that's it from